Hello and welcome to Currency Point, presented by me, Evan Lucas, for FP Markets. As always, please have a very good read through of the disclaimer on screen. Everything in this video is general in nature. None of which relied upon as any form of personal advice. FP Markets does not know your personal scenario nor your personal financial goals, and therefore none of which relied upon as any form of advice at all. It is just general in nature only. Something that we've been looking at for quite a while now is dollar yen. It has been an incredible fundamental trade. And it is that. It's one of the only pairs out there that has not been hit really hard by geopolitical events or other external issues that could jump onto it. And it's been the differential between the two central banks. We know the Fed is getting hawkish and they've moved, they've undone QE, they're now going through rate hikes. The BoJ, on the other hand, have still got ultra-dovish policy, and the carry trade is strong with that pair. Not only that, as we kept pointing out, real rates in the States is an absolute attractor for that trade. It's why the long trade has gone from 104 yen to as high as a 20-year number we haven't seen at around about 129.4. That's incredible to see that kind of movement, but it has accelerated very, very quickly. It has gone from about 116, 117 up to that 129 in a very short period of time. And it now becomes a fundamental issue economically for the Japanese. The advantage for their exports of having a cheaper yen is now being offset by the domestic economy and the impact that that is having and the inflation impact it's coming with. Who would have thought you'd be talking about Japanese inflation? Don't get me wrong, they are stuck in stagflation and their deflationary environment is still strong. It is why it's going to be very hard for them to argue to move anything around their policy. And Kuroda and co at the board have even said very clearly they're not doing that. They're still basically underpinning the entire JGB environment by buying as much as they need to. So the accommodation is still there. But, and it is a but, Kuroda himself has now said exactly that verbalizing the issues around the economy domestically starts to put a caveat into that trade. And there is ever-growing suggestions that there may be a way that even Americans get involved to try and shore up dollar yen, to bring it down to a more sustainable level. And for that reason, I think we now need to actually say it's been a great trade and a big tick, but from a risk mitigation perspective, it may be time to move on.